welcome to the trade recap from NQ. We got the 2R banked on this one. So I'm always starting with the top-down analysis, even though I'm scalping / day trading. Always top-down view from monthly to the weekly to the daily, 4 hour, 1 hour, 15 minute, 5 minute, even though to the 1 minute. So on the monthly time frame, what we saw is that we had the monthly breakaway gap we are respecting with this huge wick, and we have the push context pulling us towards the previous month high, and it is the obvious draw on liquidity where we are drawing towards. Price is drawing towards there. On the weekly time frame, we also had the bullish scenarios. We are running towards the previous week high. We closed above these weekly highs, meaning that the next weekly candle is expected to be continuation to the upper side. As well, we had the equal highs resting over there, which are the obvious draw on liquidity. On the daily time frame, we also had the push context from this daily internal range liquidity towards the external range liquidity. Also, we were sweeping the previous day low, filling the daily FEG, push context towards the previous day high and previous week high. And also this line is aligning with the equal highs right here. So push context to the upper side. Now we have bullish bias and we have the targets. On the 4 hour time frame, once the market opened on Monday, we had this huge gap at the opening, and in the New York session I was waiting for the 10 a.m. close, and this is how the 4 hour candle closed, and we inversed this gap, meaning flip context, which means that the next candle and the next thing to do is expansion towards the previous week high and previous day high and the equal highs. This is the only opposing argument that was in my way, and I was waiting for it to be disrespected prior to me getting aligned in the trade. On the 1 hour time frame, we didn't have any opposing resistances as well. The price was free to move towards the previous week high and towards the previous day high as my draw on liquidity. On the 15 minute, we have used the 15 minute FEG internal range towards the external range liquidity as my narrative. If we are going higher towards this previous week high, how are we going to get there? We're going to get there through this 15 minute FEG. External range liquidity is always my break even point, and if I'm in a trade and once this external range liquidity is hit, I'm always placing the break even. Now if we go to the 5 minute, we saw the opposing PD array, which was this FEG. And I was not willing to take the trade until this was inversed, because this is the level that could stop me from going towards my target right here and towards this break even point. I was waiting for this to be invalidated, so I'm not longing into any resistances. I flipped that resistance, I longed over there at the IFEG, placed the stop loss at the bodies right here, targeted static 2R, and I was going break even at this external range liquidity, which is the 15 minute external range. My stop loss was almost hit right here, but it played out. The stop loss was placed goodly. It's just the numbers game, and that's all basically. We can see that S&P was actually much stronger at the time, but I was looking at NQ because it was cleaner. It presented the 5 minute entry over the S&P because there were no entries right here, even though the external range liquidity was hit here, meaning that the NQ is actually the weaker asset. Both of these assets had the draw on liquidity higher, which was this previous week high, and this was just on the local time frames, and I was confident in this setup that it will deliver towards my draw on liquidity, and that is what happened. Let me know what you think about this trade breakdown. If you enjoyed it, if you have any questions, let me know. Peace.